Let's focus on a couple of earnings reactions, though. JSW Steel, well, the stock is not moving much, but otherwise, the numbers are rather good. Revenue, EBITDA, both came in better than what we were working with. The subsidiaries, they reported a very, very good performance in the fourth quarter. To understand what's the way ahead, Mr. Jayant Acharya, the Deputy MD of JSW Steel, joins us on the show. Hi, Mr. Acharya. First of all, congratulations on your new appointment and wishing you all the best at the helm of JSW Steel. Let's focus on a couple of aspects, though. One of the positives was the average coking coal cost was low on quarter 4. Could you tell us how much lower was it? And more importantly, for quarter 1 FY24, how will coking coal cost change?
So our coking coal cost in the last quarter dropped by about $6. We had guided a flattish coking coal price from quarter 3 to quarter 4. In the quarter 3, it was $280. In quarter 4, it was $274 CFR India. We expect an increase of about $10 to $15 in coking coal going into quarter 1.
Okay, can you compare the spot steel prices with the Q4 average? Just trying to understand, how do domestic steel prices compare with imported steel and what is the way forward?
Yeah, so I think the steel prices have held steady for the months of February, March. Post that, there has been some correction in the international markets driven by a subdued sentiment in China, higher exports from China. So we have seen the international prices of steel come off somewhat. It is following in the raw material prices as well. So there has been a price correction in the month of May already. We have seen about a $25 kind of dollar drop in the prices as we speak in the month of May from where we were in the month of February, March.
Mr. Acharya, can you compare imported steel prices with the domestic prices? Where do they stand?
So as we see imported steel today, from an arrival perspective, if we were to look at April, June, there is a volatility and we could see some softness coming into the June month. However, I think the margins will remain by and large stable, primarily because of the coking coal cost starting to flow through from June into July, September quarter. So we expect the raw material prices to come down as well. So therefore, we do not see an impact on the margins.
All right, Mr. Acharya, what does it mean for EBITDA per ton from here on? You know, if I compare it with your quarter 4 FY23, which delivered a bit of an improvement.
Yes, so we expect that the EBITDA per ton for the first half, it may be marginally lower in the quarter 1, but if you were to look at quarter 1 and quarter 2, yes, we should be in the similar range as to what we have given in quarter 4.
Okay, a similar range as in quarter 4. You know, JSW Steel USA Ohio's losses have come down quarter on quarter, so that's a good thing. Does it break even from here at any point? Also, can the Italian operations contribute about $10 to $15 million per quarter? Just trying to understand whether the overseas operations are seeing an improvement operationally.
Yeah, so let me put it this way. Our US operations have done very well on operational parameters. If I were to first look at Baytown, which is our plate mill, which is really doing well on the back of infrastructure and on the back of renewable energy spend in the US, we are seeing a quarterly EBITDA of $25.7 million for the Baytown operations, which was $17 million approximately last quarter. If you were to look at the year as a whole, Baytown operations has done $100 million of EBITDA. However, if you look at Ohio, the operations have improved, the operational parameters have improved. We have done a very good volume in the month of March, going into the quarter April, June as well. We see a good demand in Ohio, but Ohio has not been able to break even last quarter. It has had a loss at an EBITDA level of $12 million. However, the loss has come down from $23 million to $12 million. We expect going forward that the losses in Ohio will be lower on better expected performance by the US market. If you were to look at Italy, where we have done an EBITDA of $13.5 million last quarter, there has been a good traction because of the rail orders which we have got from the Italian rail. And that particular order is likely to stand us in good stead for the year as a whole. And we see Italian operations on the back of rail doing quite well. So we expect a similar kind of a quarterly rate to be achieved during the next year as well.
Mr. Acharya, and now given the 18,800 crore capex plan, how will debt move from here? What is the outlook on debt?
Our debt numbers, as you have seen, have come down by about 10,000 crores last year closing. We have a strong cash balance, and the way we look at it, that the debt would remain more or less similar. And the only addition which would come is the the JISPL merger, once that is declared. That would increase the debt by about 3,000 odd crores. So that is the debt addition we see. So it should be in the range of 62,000 crores.
All right, marginally higher than in comparison to what you delivered at the end of last year. Let's focus on an interesting topic then, inorganic growth. How interested is JSW Steel in NMDC Steel or NINL?
So we have already given our expression of interest, and we are one of the shortlisted bidder for NMDC. And the process of data room and the due diligence has just started. We would evaluate the asset in more detail once our people visit the site and take a view on the data as well. So as long as it is value accretive, we will look at it. We have a lot of scope for brownfield expansions, and we see our capacities which can rise at a low specific investment cost in the brownfield expansions as well. So we would focus on those, and we will look at assets which make a value accretive proposal to JSW and the shareholders as well.
All right. Mr. Acharya, but we want to hear more about that because you're interested in NMDC Steel, but you're also talking about brownfield expansion. How much will you spend for NMDC Steel? If you could give us per million ton, how much are you willing to pay?
I wish I knew, Nigel. That's a very difficult question to answer at this stage. Let the process begin, then we'll be able to tell you where we are.
Okay, good speaking to you, Mr. Acharya. Everything's good, but it's good at a price. So let's see how that one goes on that front. NMDC Steel, that's the one that Mr. Acharya is referring to. Well.